From the land-grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It's the 6th day of January 2025. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Naomi Blohm. She's at TotalFarmMarketing.com. Naomi, by the way, will also join us for our Commodity Week program recorded later this week on Thursday afternoon. You want to tune in for that at WILLAg.org or on many of these radio stations over the weekend. Then, a bit later in today's program, we'll take a look at the weather forecast with Don Day. He's at Day Weather in Cheyenne, Wyoming, and I'll bring you up to speed on the latest in the agricultural news here on this Tuesday edition of the Closing Market Report that comes to you from Illinois Public Media. It's public radio for the farming world online on demand anytime you'd like to listen at willag.org.
Todd Gleason services are made available to WILL by University of Illinois Extension.
March corn for the day settled the nearby contract at $4.44. That was a half-cent lower on the afternoon. The May at $4.51 down 3/4 cent. And new crop December corn, $4.61 a settlement price there, a penny and a half lower. March soybeans, $10.56 down 5 3/4. May at $10.68, 6 1/4 lower. And November soybeans, your new crop, down 7 3/4 cent at $10.67 3/4 cent. Bean meal futures at $2.9950, up 40, down 40 cents. Bean oil 47 cents lower at $49.40. Wheat futures soft red down 2 at $5.10 The hard red at $5.21 up 3/4. Both of those in the March contract. Live cattle futures for the day, a settlement price for the afternoon 75 cents higher at $236.62 Feeder cattle at $359.02 per 100 pounds at $3.45 higher, and lean hogs down 47.5 cents today at $85.67. Crude oil, $1.14 a barrel lower at $57.19. Diesel fuel or heating oil down about 6 cents at $2.08 per gallon, and the wholesale price of gasoline $1.70 a penny and 7/10 cent lower. The S&P 500 up about 45 points at this hour. The NASDAQ up 229, and the Dow Jones Industrial Average up around 494 points for the day. Naomi Blohm from TotalFarmMarketing.com now joins us to take a look at the marketplace. Hello, Naomi. Thanks for being with us today.
Yeah, it's always great to be here. Thanks for having me.
Tell me about yesterday's rally and today's lackluster trade.
Yeah, so yesterday grain markets supported by a combination of technical buying, seasonal buying, grain markets were cheap buying, and also some fund money reallocation. And then we also got news for the soybeans that there were rumors that China had bought beans, so that all lifted the market yesterday. So today we got the confirmation that China had purchased beans, so 336,000 tons of beans to China. So that, of course, welcome news, but since we priced it into the market yesterday, today ended up becoming a turnaround Tuesday with a little bit of slight back infill price action, with corn finishing about a penny lower and beans down a nickel, with wheat about 2 cents lower. So no technical damage done, really. Corn putting in a bullish key reversal for the March and May contracts yesterday after testing support is really good. But when you stop and look at corn, we're still range bound. March corn stuck still in that 13-cent trading range that we've been in since about, mid-October. So between upcoming events later this week and, of course, the USDA report on Monday, we're going to finally see which way these grain markets break out of this price trading range. And so that's what we're kind of up against for the week.
Wait, what's the upcoming event later this week?
Yeah, so looking at Friday, we found out now that the U.S. Supreme Court has scheduled Friday, January 9th, as an opinion day. So it would be the first opportunity for the justice to potentially issue a ruling on President Trump's sweeping global tariffs. So we don't know for sure if they're going to address the large elephant in the room of, are the tariffs legal or not, or are they just going to be kind of talking about it and then going back, doing a huddle, and then coming out later in a few weeks to do more of a final decision. But that's going to have the market kind of geared up on Friday because, of course, we need to know if these tariffs are legal or not and how that pertains to grain export sales. So the market's going to be really watching that for Friday and any commentary that comes from the Supreme Court. And then with the WASDE report Monday, you cannot ever outguess the WASDE report for the January report. There's always usually some dramatic surprise in it that you didn't see coming. And I think with corn, the fund traders right now are pretty much even in the market. We got the official and final commitment of traders report, so we're up to date on all of that. The funds had been short about 23,000 contracts of corn, but yesterday they bought back 21,000 contracts of corn, so they're probably neutral in the market. So they're waiting for the WASDE report. They're waiting for this tariff news before they commit to being buyers in the market or sellers in the market. So you really have to be ready for anything that can happen on Friday or Monday and how it translates into the grain markets. Now, I really want to focus on cash sales, especially for corn. If we get a friendly report, if we get some bullish news here, if March corn futures have a reason to get above 450, there's a technical upside down head and shoulders formation that points to the 475 to 480 area as a possible target higher for the March contract. Now, that would be a great place. If you have corn in the bin that you need to be selling, that is going to be your cue to be making the cash sales. And on December corn, new crop corn, what you're going to be planting in the spring, we're at 461 today, and 475 is big resistance on that December 26th contract. And then that was also resistance for the December 2025 contract. So 475 is a big resistance area for new crop. 475 is a resistance area for the March contract as well. So those are some cash sale targets to be focused on between Friday and Monday and potentially the week after, but always have plan B ready in case we get a negative report and prices slide lower. Just have to be ready to scenario plan for anything.
So those two things, the Supreme Court Opinion Day and WASDE, are more related than you might think, depending on what the Supreme Court does as it's related to the opinion and how it might shape policy, if it does shape policy, because USDA, if it shapes policy, will put that into the World Ag Supply and Demand estimates, one way or the other, as to what those tariffs might mean going forward for the 2026 year. What might you think about the soybean market since you had a cash strategy for corn?
Yeah, so looking at that bean market, of course, we've had that huge sell-off during the month of December. The March bean contract got all the way down to a major support area, which had been actually the uptrending line for an entire year. So that 1050 area was a big deal. If we can have a recovery bounce into Monday, 1085 on the March contract is our target area. That's going to be the 100-day moving average. That puts us back to where it had been resistance on the way up. Once we got through it, it was some short-term support on the way back down. So that's our short-term target there. And then $11 on the March contract is the next area of resistance. To get through that, we would need a friendly WASDE report. We would need some additional demand from China. We would have to have tariff news that would be received as positive from the standpoint of keeping export sales going. So a lot of moving parts that all come together. So looking at the November contract for new crop beans, which you're going to be pricing in, those finished near 1067 3/4 today. But if they could at all get back up to that $11 area, that's definitely a place to be making sales. The high before that from November was in the 1130 area, but if we can get back to $11, that might really be a great place to get going on some of those sales.
Hey, thank you much, and we'll talk with you Thursday for Commodity Week.
Sounds great. Thank you.
That is Naomi Blohm. She is with TotalFarmMarketing.com. In today's agricultural news, we'll start in Washington, D.C., where the Senate Ag Chair John Boozman said in a recent interview with AgriPulse that more farm aid will likely be needed this year, but he can't say how much.
I think the question is if we need to, and I think we probably will.
Boozman told AgriPulse recently,
with high input cost, very low commodity prices, our markets not being as good as we'd like, it's made it very, very difficult. So I think the commitment's there. I think that Congress will step up Question is how much.
Boozman would not offer a figure, while House Ag Chair G.T. Thompson says at least $10 billion more, on top of the pending $11 or $12 billion. Though USDA Undersecretary Richard Fordyce did tell Reuters recently his agency is not considering more farm aid, at least yet, despite some $44 billion in farmer losses last year. Chair Boozman agrees that money is a limiting factor.
What do? We can't keep throwing money at it. How do we increase our markets? What do we do to get farmers in a sustainable position?
Boozman said that the Senate Ag Committee will hold 1 or 2 hearings on that in the coming weeks. Meantime, Boozman says USDA and Capitol Hill will factor in existing aid and the coming boost in farm supports to determine the unmet need. On that note, U.S. farmers are facing one of the widest gaps between what they pay to produce food and what they earn from selling it. Investigate Midwest said it's the largest gap farmers have seen between income and expenses in 10 years. New USDA data released in December shows that by October 2025, the prices paid index climbed to 154.6, while the prices received index had fallen to 120.5. The agency measured that against 2011 levels, which are set to 100, making it easier to see how it's changed over time. Investigate Midwest said in practical terms that means production costs were over 50% higher than in 2011, while the prices farmers received were only about 21% higher. The gap of 31.1 index points in October was the biggest gap back at least a decade. Terrain Ag is projecting slightly higher operating cost per 2026 corn and soybean crops. Let's stay in that gap area. This time we'll move to USDA, which has released details about how much crop farmers will receive this year from that $12 billion aid program we've discussed already. However, U.S. soybean producers say the payment won't help farmers hurt by low crop prices and trade disputes. Reuters said while the aid is expected to help farmers get ready for next season, growers and agricultural economists say those payments will only cover a fraction of farm losses and will not rescue the sagging U.S. farm economy. The one-time payments will go to growers who planted one of the 19 covered crops. The highest per acre payments will go to rice farmers, who should receive more than $132 an acre, cotton farmers around $117, oat farmers $81. Meanwhile, farmers are eligible for $44 an acre or thereabouts for corn and about $30 an acre for soybeans, and around $40 an acre for wheat. The overall payment limit per entity is $155,000. Now let's turn to livestock. China's new beef tariff comes just as the new USTR chief ag negotiator settles into her job with a pledge to open that market to beef and other U.S. farm commodities.
China across the board has been weaponizing agriculture.
That's Julie Callahan speaking at her October Senate confirmation hearing, but China's Commerce Ministry insists it just announced 55% above quota beef import tariff is a safeguard measure to protect its domestic industry. Either way, it's a new challenge for Callahan, who vowed in October,
"If confirmed, I am committed to reopening China's market to U.S. beef."
And beef is part of a list of restricted farm products.
Sorghum, beef, a number of commodities, cotton, across the board.
China imported just 138,000 tons of beef from the United States in 2024, compared with over 1.3 million tons from Brazil. U.S. volume dropped to just over 55,000 tons through last November after Beijing allowed permits to expire at hundreds of U.S. meat plants amid China's tariff war with the U.S. China's new tariff took effect on January 1 for 3 years, but with the total 2.7 million ton quota set to increase annually. Now let's turn our attention to a couple of good news items. USDA data says exports of corn and wheat remain well ahead of year-earlier levels, while soybeans lag behind last year's pace through the week of December 18. Corn exports for the start of the marketing year on September 1 through mid-December are 24.61 million metric tons. That's up 67% year over year. Wheat shipments from the beginning of the marketing year at 14.561 million metric tons are up 24%, and soybean exports are reported at 14.237 million metric tons, down 46% on an annual basis. Speaking of soybeans, the clean fuels industry strengthened its foundation in 2025 behind record policy targets, new engine capabilities, and proven performance, setting expectations for continued growth in 2026. Government agencies, fleets, manufacturers, and consumers in 2025 recognize that biodiesel and renewable diesel have stepped forward and taken the leadership position in fueling our nation's transportation, they say. Clean fuel use has grown dramatically in recent years, and for the first time, policymakers took full account of that growth. Last year, for the first time in history of the Renewable Fuel Standard, the EPA proposed a robust biomass-based diesel volume that reflects the industry's potential. EPA proposed a renewable volume obligation of 5.16 billion gallons for the 2026 calendar year. And that's a look at today's agricultural news. Let's turn our attention now to transportation here in the United States. A proposed merger could mean a big change for the U.S. railroad industry. Union Pacific is working to acquire Norfolk Southern, which would create the nation's first transcontinental railroad. The purchase agreement is awaiting approval from the Surface Transportation Board. Mike Steenhoek, executive director of the Soy Transportation Coalition, said there's been a positive and a negative reaction from shippers.
I'm hearing both. I'm hearing from agricultural shippers, those who actually are quite supportive of the proposed merger between Union Pacific and Norfolk Southern. And they point to the fact that you're going to likely have more seamless service from one area of the country to the next. So you'll have an agricultural shipper that has a collection of facilities that are west of the Mississippi River, and they would like to have greater access to maybe some of the livestock markets in the southeast part of the United States, or to the East Coast where for the ports over there, say if there's problems at West Coast ports or markets in the West. So you have this prospect for more seamless service.
The merger, it'll mean fewer handoffs between railroad companies.
One of the realities within supply chains is that handoffs are expensive. But because you have a couple western railroads, a couple eastern railroads, you have a collection of these handoff locations like Chicago, like Memphis, Kansas City, etc. And freight does not like to be treated like a baton in a track and field relay race. The more you can eliminate handoffs, the better.
However, he says there's a lot to not like about the potential merger.
People point to the fact that this is not our first rodeo. We've had mergers, acquisitions, consolidations within the rail industry for a number of decades. And what that does often result in is higher rates, a decline in service. And for agriculture and other industries, what you want is as many transportation providers competing for your business. That's good for us. And when all of a sudden you start eliminating or reducing those transportation providers, you start changing that competitive balance away from the customer, agricultural shippers in our case, toward the railroad. So rightfully, there's a number of shippers who are very concerned about this.
Again, that's Mike Steenhoek. He is with the Soy Transportation Coalition. You're listening to the Closing Market Report on this Tuesday afternoon. If you'd like to hear the program again, you can do that right from our website. Just click and play from willag.org. That's WILLAG.org. Or you can search it out by name in your favorite podcast applications. There is a podcast tab at willag.org too, where you can subscribe to the Closing Market Report and or Commodity Week, both if you'd like. You'll find them in Apple as well as on YouTube and many other places, including Spotify. Or you could just ask Alexa or Google if they could play the Closing Market Report. That's right, you can do that, or watch it, listen to it, I suppose, on your YouTube account on your TV, because it's right there as a podcast in YouTube. Well, the Closing Market Report and Commodity Week, part of the service that comes to you from Illinois Public Media, University of Illinois Extension. Oh, by the way, on the home site at willag.org, don't forget that you also can find information from the agricultural economist, the crop scientist, and the animal scientist right here on the Urbana-Champaign campus of the U of I. Let's check in on the weather forecast now. Don Day is here. He's with Day Weather in Cheyenne, Wyoming. Hello, Don. Thanks for being with us. You know, sometimes in January we get a January thaw. It usually doesn't last all that long, though it appears this one might be around for a while, at least in portions of the United States. Can you give me an assessment of what you think is happening in this hemisphere?
Yeah, so what we're seeing right now is a major realignment and a big adjustment. We've had two major blocking patterns out in the oceans. Big blocking near Greenland in the Atlantic, a big block in the Bering Straits near the Aleutians in the Pacific. And with that breaking down, both of them weakening right now, we're seeing a west to easterly flow across the nation that has led to that thaw that we've been talking about. But as the pattern evolves and changes and readjusts, I kind of like to use the analogy of a Control-Alt-Delete. We're kind of just resetting everything, and we're going to see part of that reset. There will be a cold front that will come out of the Pacific Northwest and into the Plain States this weekend, late this week and into the weekend, that will bring a cool down. The air behind the system is not true Arctic air. It's colder Pacific air. So there isn't going to be a huge drop in temperature, but there will be a little bit of winter into the Plain States, into parts of the northern and northwest Corn Belt late this week and the weekend. There'll be some areas out in winter wheat country that haven't seen a drop of anything in weeks. Places in Kansas, eastern Colorado, parts of Oklahoma, Texas Panhandle could see some snow out of the system.
So that would be good, particularly if it's going to get cold. I was going to follow up with whether there was enough snow cover or would be enough snow cover to protect a crop that may have tried to come out of dormancy because of this warm weather at that time. Sounds like there might not be too many worries.
No, I don't think so. The next round of cold is probably going to be a bit more of that Arctic flavor, but that probably isn't going to happen until after the weekend after this one.
Turn your attention to South America. Give me an update on crop conditions in both Brazil and Argentina.
Both of those locations are going to be picking up a little bit more in the way of rainfall. It's been pretty warm in Brazil and a little higher than normal over the last week and a half or so. Argentina's been a little bit cooler, but we're going to see a more active pattern. So rainfall across both countries. Overall, their growing areas is going to be on the uptick here over the next week or two.
On track for good crops in both places?
I think so. There's nothing that I could see that stands out as a real big problem for South America at the moment.
Thank you much, Don. Don Day is with Day Weather. He is in Cheyenne, Wyoming. Joined us on this Tuesday edition of the Closing Market Report that came to you from Illinois Public Media. It is public radio for the farming world, online on demand anytime you'd like to listen to us at willag.org. That's WILLAG.org. We're there today, right now. You'll find all of the audio from the mid-December Farm Assets Conference. I'll leave it up for the week. You can find it, of course, in the Closing Market Report podcast as well. It aired last week right here on our station over the winter break. All of the Farm Assets Conference audio online today at WILLAG.org. You have a great afternoon. I'm University of Illinois Extension's Todd Gleason.